Hey everyone, John here. So in today's video, I'm going to be going over my first project, which is trying to replace an entire equity research team at an investment bank with AI and Python automation. So let's go over that. But before I get into it, I want to say thanks to everybody for supporting my channel and subscribing. I'm about to hit 300 subscribers, and my last video about mass producing equity research was very well received, so I really appreciate that. And I'm gonna go so in this video I'm gonna go over what equity research is, why I plan to disrupt it, because I think it has some weaknesses, and I feel like if I focus on equity research, I can really bring a lot of value to my subscribers. But yeah, so let's go over what equity research is. Equity research departments within the investment banks analyze publicly traded companies to provide insights and recommendations on their stocks. Analysts evaluate financial statements, industry trends, and macroeconomic factors to produce reports that include stock ratings, which is like a buy, a hold, or a sell. They give target prices, so they'd be like, hey, it's currently trading at $10. We estimate a target price of 15. You'll find those aren't usually accurate, and then they have like investment theses, and I'll go over what that looks like. But yeah, these insights help institutional clients such as hedge funds, and asset managers make informed decisions. Equity research also supports bank sales and trading teams by providing market intelligence and facilitating informed interactions. So the key with the equity research department is they make research specifically for institutional clients such as hedge fund managers and asset managers. If you were to try to get an equity research report as a retail trader, you just wouldn't be able to get it, even if you had a bank account of like $1 million. You just wouldn't be able to get one. So that's like a major thing that I'm going to try to fix by through finance automation and using AI. In addition to guiding investors, equity research departments enhance the bank's reputation as a thought leader and may indirectly generate revenue by driving trading activity or supporting investment banking deals. But yeah, we'll go over like what their main goal is. Like, although they're equity research, the main purpose of them is really to drive business towards the investment banking department, like mergers and acquisitions, equity capital markets, debt capital markets, and sales and trading. And those are really what generate revenue for an investment bank. For instance, research coverage can aid in underwriting equity issuances or mergers by demonstrating the bank's expertise in a specific industry or company. Though not directly profit-driven, the department's insights play a critical role in maintaining client relationships and the bank's competitive position. But yeah, now that you kind of know what equity research is and its role within like an investment bank, let's go over what their weaknesses are. And what their structure is. So equity research teams typically consist of an analyst and associate. So the way that an investment banking team works in the investment banking department is there's an analyst at the bottom, an associate, a vice president, and then a director. That's usually the hierarchy. But basically, like, in the equity research team, it's the opposite. So like an equity research analyst would have like an equity research associate. Like the equity research associate would be like preparing like the reports, not writing the reports, but preparing the reports, and then preparing like any financial models and things like that. And then like the equity research analyst would be focused mainly on developing relationships with clients as well as developing relationships with the companies themselves. But yeah, so let's go over that. Equity research typically consists of an analyst, like I said, which is the top dog, and then an associate, which is kind of like the Robin, leveraging their specialized skills to deliver stock recommendations and investment insights. So while these teams have advantages in advantages in terms of domain expertise and institutional resources, Python and large language models offer significant potential to replicate or surpass their value for retailer investors. So here's how it's me, how I can position myself and my project to address their weaknesses and bridge the skill gaps highlighted by my resume. So what I actually did was I literally fed ChatGPT my resume so you could see like what I do for a living, and all that stuff. So I fed all of my knowledge into the LLM, so I can identify like what I'm essentially competing with these folks. So I need to know what my strengths, my weaknesses are, what their strengths and their weaknesses are, and by kind of doing a strengths, weaknesses, opportunities, and threats, I can identify how I can pretty much dominate them. Right? Like I'm going for the jugular on this one, no cap. But yeah, let's take a look. So key shortcomings of equity research teams: scalability and coverage. Limitation: equity research teams focus primarily on a limited number of stocks, usually within their coverage universe, often large cap or revenue generating companies. Small cap and emerging markets are under researched. So in Canada specifically, we have main sectors. So there's like financials. So financial institutions group, there's like oil and gas. If you're from Alberta, there's like forestry and paper products, and then there's mining. Those are like the main. There's like in the US, the big ones are like TMT, healthcare. There's a bunch of different ones, but the main gist of it is they're only focused on one sector. So what's my edge? Python scripts can automate data collection and analysis for thousands of stocks, broadening the coverage significantly. So while some teams are really focused on only one sector, I can be a multi-sector analyst with automation, right? Like these equity research folks are mainly from top schools with mostly just finance backgrounds. They don't have tech. And most of the time, like the analyst comes from industry. So let's say they're like in forest and paper products. They come from the forest and paper products industry, and then they become an analyst. And with that switch, they don't really have the opportunity to learn tech. So when you're equity research associate or equity research analyst going into like an equity research job on the sell side, you'll notice that you're using like Excel. You're using like, to be quite frank with you, like outdated tech, right? Like if I can come in here with Python expertise backed by some like tech, right? Backed by some tech with my finance expertise. Like I also have like a chartered financial analyst designation. So I also bring some finance firepower. I feel like I can have that edge. And then of course, LLMs, so large language models, can generate on-demand insights for under-researched companies without requiring additional human effort. So I can gather a vast amount of data. I can evaluate those inputs, feed them into a model, and then I can evaluate the outputs, or I can even train another model on top of the model that's gathering data to evaluate its outputs, right? So I have the domain expertise for that. So that's basically what it's saying. Like I have an edge with the Python script and I have an edge with the LLM, and that's going to probably dominate their ability to like just only focus on one sector. Right? Bias and conflicts of interest. So like we kind of alluded to at the start, equity research departments within banks focus primarily on servicing institutional clients, and they have relationships with the companies that they're covering. So what that causes is biases, right? So let's go over that. Limitations. Analysts at investment banks, specifically equity research, often face pressure from investment banking to produce favorable reports on companies their bank does business with, leading to biased recommendations, right? So imagine the person that you're covering has ties with your investment banking department. You say that that company is worth less than what the market thinks, then your investment banking department has a harder time to sell that company. I mean, that's where the bias is coming from, right? So what's my edge? AI-driven insights can be unbiased as they lack corporate influence. So what I plan to do is I could probably tap into some earnings calls and things like that, feed that into like a natural language processing AI, get like a transcript and almost disseminate the same information as the equity research team as the equity research team themselves, right? So that's going to be pretty powerful. Transparency and methodology. So with the way that I'm going to be doing this, like you can see the code that I write. You could see everything, right? Like yesterday I showed how I'm pulling data, how I'm even engineering the prompts and everything. So that's pretty transparent. But yeah, I hope that's building trust. And then cost barriers. So institutional equity research is expensive, often locked behind paywalls or exclusive to high net worth clients. And by high net worth, I'm talking like, guys, you need to have like $2 million minimum, plus you need to be making $300K a year, plus you need to have debt. Like that's the type of level of it. That's the type of level that you're going to need to get some equity research seemingly. So what my edge is, Python-based systems and LLMs can generate free or low-cost reports for retail investors, democratizing access to financial insights. And then timeliness. Research reports are often slow to release, delayed by manual processes and approvals. So usually at an investment bank, it would be like, hey, we just found out that they just released their their quarterly results or their 10Ks, 10Qs, that's what they call it. But like the quarterly and the annual report, like the equity researcher associate is going to come in, like in my part of the country, these folks are coming in like 5 a.m. in the morning, 4 a.m. in the morning, because they have to operate on like East Coast time. They're half asleep. They're using Excel. They're not that efficient. Facts. That's just the reality, right? Then they have to give their work to the equity research analyst, which is basically like vetting their work. That takes some time. What I could do is I could probably try to gather all of that data and use AI to validate it, right? I mean, it might not be as good, but like I said in that alpha video, there's 3 things that generate returns: accuracy, timeliness, and what was the other one? But yeah, like accuracy, timeliness, and that's like the main thing, 2 things. But yeah, like I kind of zoned out there. But yeah, like the gist of it is I can definitely do the timeliness piece. Generalized insights. So institutional reports target broad audiences, often ignoring individual investors' needs or goals. So what's my edge? I can tailor my LLM model, like I can tailor the insights generated by my LLMs to specifically target a retail investor based on their portfolio preferences, risk tolerance, and goals, right? So let's say you give me some information like, hey, I'm looking specifically at these industries. I'll feed you only those things. And also like AI can tailor reports to specific demographics like millennials versus retirees, or strategies, value versus growth. So I think in if you've been following this channel, like 2 to 3 weeks ago, before I was learning how to code, I was also like prompt engineering, like growth at a reasonable price investing. I was like prompt engineering value at value. I was prompt engineering momentum. So I can bring all those prompts that I was generating like a month ago into the LLM. But yeah, so that's the weaknesses of the equity research team. Now let's take a look at my skill set and what I bring to the table, right? So these are skills that I don't have yet. Institutional access to data. So analysts use paid tools like Bloomberg Terminal, CapIQ, and FactSet for premium financial data and market intelligence. So me, like I'm a FactSet user. I never really use like Bloomberg or CapIQ, but I'm more of like a FactSet type of. Well, I mean like I use FactSet. What's my gap? So my access is going to be limited, and I'm going to have to use like free APIs like Yahoo and Finance or Alpaca, or I'll have to develop stuff like my AI enhanced web scraper to generate like similar insights to Bloomberg Terminal, CapIQ, or FactSet. And even then, like I might not have like full information, right? But I mean, like the information that they're using doesn't even generate like superior returns anyways. So I'll have to identify like other ways of generating alpha that traditional equity research teams aren't using, and I might be able to either like I'll probably be able to like I'm hoping that I can beat them, right? At a lower cost. Solution: leverage free or low cost data sources initially and scale to paid options as my project grows. But yeah, I'm going to use like my free strategies first before I go ahead and use like something nuts. Deep industry expertise. So equity analysts, like I was saying before, they come from industry most of the time. So like let's say they were in oil and gas, they're usually like a PNG working in like upstream, downstream, midstream, right? I'm not going to have that type of expertise. So equity analysts will have like specialized knowledge, specifically like a PNG and stuff like that. But while they have like, so what's my gap? So I have strong financial modeling skills, but my sector specific knowledge may not match a specialized analyst. So what's my solution? Use Python and LLMs to analyze sector level trends at scale and fill gaps with AI generated summaries. That's what the plan is. Like I don't think that I would say AI is so powerful that if you like bring in if you can generate like a lot of reports and aggregate the reports kind of like a meta analysis, there's no way that a human can compete, right? Plus automation, a human can't compete, right? And I'm not sure if these folks in the investment banks are using it just yet. So I might have a chance to get this out, get ahead of the curve if I do this first. Network and client relationships. So this is another main one that I'm not going to have, but it's also a strength. Analysts often have direct access to C-suite executives and conduct interviews to gather qualitative insights. Obviously, like me, I'm going to lack direct access to executives or corporate networks, but I would say like on the other end of this, because I don't have to kiss people's butts essentially to get access, because like imagine if you rub one of these folks the wrong way, like you're gonna get your access cut. So if you put a negative opinion, I mean, like you're not going to get access. So obviously your reports are going to be biased, which is not good for you, the investor, right? So I think this is actually more of an edge than it is a weakness for me. But yeah, solution: use sentiment analysis on earnings calls. Like I was saying, like I can pull the earnings calls, feed it into an LLM, which I'll definitely be working on that. And then social media. So in previous YouTube channels, like I've had discussions with some of my commenters about like, hey, how do you pull from Reddit? How do you pull from Twitter? How do you pull from XYZ? Here's the thing. These LLMs are literally trained on social media right now. Like Grok's AI is trained on social media. So there's got to be some information that I can grab from there. And then I can use RAG, or I could use like AI enhanced web scraping again to like grab that information. And I'll find some ways and then use to replicate qualitative insights, right? Regulatory and compliance knowledge so analysts are well versed in regulatory frameworks, ensuring their reports meet compliance standards. My gap is obviously like I'm not going to have that same level of regulatory insight, but I'll figure out some ways to do that. I don't think that that's a big issue, really. Your advantages. So automation, Python enables you to automate repetitive tasks like data cleaning, analysis, and reporting. Something that requires hours of manual work from associates. Like these folks are literally pitchbook monkeys. Like they literally are doing a ton of this stuff, right? Gathering information, like spreading comps, building a DCF, like doing a sensitivity analysis. Like all of this stuff could literally be done in Python on a mass scale. And you're about to see it. I'm gonna show you how I did it. Like even on the WACC, the weighted average cost of capital, I can calculate the weighted average cost of capital, run a sensitivity analysis on the WACC and the growth on like every single stock trading on the TSX in less than like 10 minutes, like with a for loop. Like it's insane. Right? Behavioral focus. So your mission to influence retail investor behavior, your mission to influence retail investor behavior, avoiding emotional trades as a behavioral finance edge. So traditional research often ignores that. All they care about really is like the normal stuff, like what's the valuation? What's the risk? What's the investment thesis? They don't really care about like, hey, are you trading this stuff? Like, are you in and out of the market? Do you have fear of missing out? Do you have these types of situations? I can bring that to the equity research report because I'm also a retail investor, right? So I can like, hey, what I'm planning to do is I have a machine learning algorithm. Like I'm talking about this in like I'll have a machine learning algorithm that's about to predict like a major move. I'm going to like have a AI automatically build the equity research report that you can read right before you make an emotional decision that might prevent you from day trading, right? The most important things in investing is investing early, investing often, staying invested, and diversifying. If I can get you to do those 4 things, you're going to beat the market. Well, I'm not saying you're going to beat the market. Let me correct that. You're going to do better than you would if you were to be trading with no brain cells, essentially, right? Transparency, so I can build trust by open sourcing my methods and providing real-time updates. But yeah, so targeting equity research's weaknesses. So automating the research process using Python for stock screening, fundamental analysis, and then technical signal generation. Integrating NLP tools to analyze news sentiments, earning calls, and social media. And then providing behavioral guidance. Design large language model powered nudges to discourage emotional trades. E.g., the stock price drop is within historical norms. Consider your long-term goals, right? Like I'm going to start sending you folks emails like that. Once this is out. Expanding coverage, develop tools that can screen mid-cap, small-cap stocks, which are often overlooked by large research houses. And then timely alerts. So let's say the AI or like my machine learning model or whatever detects like price drop. this like report, which is covering like most of the stocks in the TSX, probably will be able to generate a quick report and be like, hey, this is what you're looking at. If you're about to make an emotional decision, at least be a little bit informed, right? Transparency and accessibility. I'm going to try to make it clear and jargon free, but it's just hard within the report. So I'll probably like sprinkle in like, okay, what is ROE? What is PEG? What is like all these financial ratios? So if you're a retail investor, you can actually know what EBITDA is, what enterprise value is, what a DCF is. Like all of that stuff is going to be baked into the equity research report, so you can actually learn. But yeah, and I'm gonna produce videos on that. But yeah, roadmap to building a complete system. So I think the stock screener is gonna take me like a quarter at least, and then automating the email alerts. I'm not sure how long it will take. Like I'll see. Like I'm definitely learning. So I just learned my first Python course, and then I'm learning all of these. So I'm going to bring that in. I'm literally sprinting. Okay. I'm working like 40 hours plus a week. Working out. So I work out. I'm traveling. And I'm going to learn how to code. And I'm doing it. I'm doing it selfishly for myself, because obviously I think that this is like a big revenue potential. But I'm also doing it for you folks at home, because I feel like I'm going to generate revenue for myself by generating value for you, right? And I'm going to try to do it free of charge, and I'm going to try to do it all open source, right? Like I'm going to try to democratize the whole thing. And hopefully I don't give away all my profit. But yeah, automate alerts, behavioral guidance, design simple actionable nudges. So that's probably like the first 0 to 3 months. And then the advanced insights going to be like 3 to 6 months. So add LLM capabilities, sentiment and analysis, expand features to other things. Multi-agent collaboration. So creating a specialized agent. So like this stuff is more so probably in the 6 to 12 months. Hopefully AutoGen, LangChain, LangGraph see like continued improvements. And then by the time 6 to 12 months come, they're going to be great. I don't want to be accidentally spending $120 on API calls, right? But yeah, and then monetization and scaling. So hopefully after 12 months, I can monetize this. But really, like the main thing is I'm learning how to code, and I'm bringing you folks value, right? Like I said, my mission, like I put it on every single one of my videos, what my mission is. My mission, let me pull it up. Actually, I won't pull it up. But my mission is to like help you folks at home. But yeah, so in conclusion, while equity research teams excel in institutional access, domain expertise, and network relationships, you can target their weaknesses which are bias, scalability, cost, and timeliness, to provide retail investors with actionable, affordable, and unbiased insights. So Python and LLM-based solution, which is what I'll have, has the potential to democratize financial insights while paving the way for your larger mission of building self-improving, wealth-maximizing agents. So start by focusing on retail investors' needs and iteratively scale your system towards more advanced goals. But yeah, like my mission really is to identify how to invest in stocks. So investing your money is one thing. I feel like investing your money is actually, it's a lot more simpler than most people realize. Like there's 3 main resources that you have as a human being. So the first resource that you have is money, right? Money, I mean like financial resources. The second resource that you have that is, I would arguably say, is probably a little bit more important than your money, is your energy. So your energy levels, like if you're lacking sleep, if you're not eating right, if you're not healthy, your energy levels, you will not be able to make good decisions with your money or just any decisions in general. So like that's your energy is a big resource. And then obviously like the third resource is your time, right? So like how you spend your time. Are you on social media scrolling? Are you doing XYZ? Like you need to be able to optimize those things. And I feel like I can really help people, right? I can really help people. But yeah, please like and subscribe. I'm going to really optimize my time to try to get this done and kind of learn coding in the process, right? Like I don't know when I started learning this, but I'm kind of already on the right track. So I kind of have a sense of what Python 3 is. I'm probably going to do a review on this Codecademy. I really enjoy it. I really enjoy it. But yeah, until next time, please like and subscribe. Bye.